Good morning. It's Saturday morning, August 24th, 2019. This is Ron Brown. I've been away for a couple of weekends, but I'm going to get back in the swing of things. I have been updating the non-index files and posting them every day for you to download from the server. But other than that, I've been working on some things in the background which are not ready to be released yet. I don't have any new files for you this week is what I'm trying to say, but I am working on some things based upon Wyckoff demand and supply. I plan to do a webinar next Thursday from 2:30 to 3:30, and I'm going to talk a little bit more about fractals and also get into some of the newer files and filters that I'm working on. Anyway, I want to talk a little bit about the market today. This is an impossible market to trade. It's just absolutely crazy. You can see that I have my screen set up here. This is the layout I use pretty much every day for HGSI. I am in my Major Markets Plus folder and using the number one view, the top-down analysis, Major Markets Plus. This is a daily chart. This is a weekly chart. I'm going to open up the groups, and just in case you're new to HGSI, I do produce a file called Market Analysis User Groups. It's got a lot of folders in it, yes, but they all serve a purpose, and there's a lot of pertinent and valuable information in here. What I'm working out of today for this video is this folder right here, the Major Markets Plus. And years ago I named it that because it had has the major markets in it. Plus I've added some ETFs just to get a feel for the overall market. Now I'm going to enlarge this. You can see that it's sorted on the raw combo, which is the raw combo rank is the percentage price change one day. And here's the column for the percentage price change one day. You can see the VIX, the CBOE Volatility Index, was up 19.1% yesterday. Gold miner ETF, and this is the advantage of having the ETFs in here. I can compare the ETFs to the broader markets. It was up 4%. Silver Trust iShares up 2.4. GLD was up 2.0, and the 20-year Treasury bond iShares is up 1.6. Everything else was negative for the day, and you can see the hardest hit index in here was the SOX index. The tech stocks are taking a beating in this Trump tweet-driven market. You can also see that the NASDAQ is hit hard along with the Russell. NASDAQ was down 3%. Let's see where the NASDAQ 100 is, down 3.1%. And there's some real serious damage done there. Transports were down 3.3%. Now I'm going to go back to my layout here, and I'm going to go to the NASDAQ. This is where I usually start. And these charts are linked to the warehouse. If you don't know how to do that, just go down to the bottom of these charts and select link multiple chart windows, and warehouse selection follows chart. In other words, if I click down here on a warehouse view, they're going to come up in the charts up here. Okay, so I have to locate my NASDAQ again. And here's the NASDAQ. I'm going to go to my market charts. And this is my base chart for the NASDAQ. See if I can make it a little bit larger here so we can see it better. And this contains a lot of information. Now I need to zoom out. I'm in too tight, but you can see the long black candle yesterday, which was created when Trump started tweeting about China, and it was a disastrous day, to say the least, for the longs. And this is why this market is just very, very hard to trade. I want to zoom out on this and show you what the market looks like when we're in a more bullish trend. And I'm just going to draw an arrow up here. You can see how these are mostly white candles closing in the upper part of their daily ranges. Yes, we have some short-term pullbacks, but generally it's moving up. And now we're into this chop. Change arrows colors over here, and you can see that it's just impossible to feel comfortable putting on new trades, because chances are that you're going to get stopped out, or at least quickly be on the wrong side of a trade and in losing position. So with this chop that's going on, let me go back. Now this was a pretty decent run right here. This V bottom, we had a V bottom, as you can see, but just over the past several weeks here, it has really been difficult, and I'll show you how difficult it's been. Let me bring up, this is yesterday. This is a 1-minute chart of the NASDAQ futures. This was late in the day. Unfortunately, I didn't capture the time, but this is where the market on a 1-minute chart was putting in a selling climax. Now this bar looks small compared to this bar, but there was a lot of fear in the market yesterday, and this reversed almost, well, it reversed. Here was the selling climax. This corresponds to this volume bar, and then it started moving up, and this move here happened beginning right here and going to here. The NASDAQ futures were up 50 points in less than 5 minutes. So if anybody was putting shorts on during this period, or rubbing their hands together because they were gleeful, they were short, while all that evaporated. Well, not all of it, of course, because we had a huge market down day, but the buying was tremendous, starting right here with this bar, which corresponds with this effort to rise. And it would be very easy to lose a lot of money in a hurry if you're on the wrong side of that trade. It takes nerves of steel to trade these futures, especially in an environment like this. It's just insanity. Okay, now let's look over here at the weekly chart. You can see that this was a pretty smooth run here, and we had the correction. This was relatively smooth. Big candle down this week. It was very hopeful 3 weeks ago, and then uncertainty, and then this is what happened this week. It has held above this wick on this particular candle, so it hasn't totally broken down yet, but it has been an extremely choppy, difficult market. Interestingly enough, the volume was lighter this week, and I would attribute that probably to a lot of people being on vacation. Hard to say will happen. We'll see what happens next week, and there's certainly, I'm certainly not making any market predictions. It's ridiculous. Most market predictions are not even worth listening to, but you can see when things are pretty good, it's when we're in a bull market and you see these white candles closing near their high, it's relatively easy to predict market direction. But when we get into this mess, it's impossible. Okay, so let me break this out a little bit here. I'll get rid of that. I'm going to zoom back in. And I'm going to hit my alternate I key. And that brings this information up. Just position it over here. Take a look at this. I'm looking at this for the first time. The Nasdaq's down 7% from the 52-week high. It's still up 25.2% from the 52-week low. It's up 16.8% from the beginning of the year. Price change one day minus 3%. That closed at 7.65% of its daily range, and that gap down minus 0.60. VPOC, volume point of control, is negative. Accumulation is C. Bongo weekly is negative. Bongo daily is negative. VPA, best fit long-term trend, is down. The medium-term trend and the short-term trend are still considered up, which seems kind of strange, but those are mathematical formulas, and they just haven't kicked in yet. Neither an EMA fan uptrend or a downtrend is in place. The percent volume to the 90-day moving average volume was negative, as I pointed out, the light volume. And the simple moving average. Now, yesterday, advancing stocks were only 347 compared to minus 2187, and the unchanged 73. You can see that the volume was overwhelmingly negative. And it's actually easier to just look at it visually down here. New highs are 41, new lows 143, and the ARMS was extremely negative. Okay, now let's just, let me go over this. I guess most of this has already been covered, so I won't cover that. And that information that I just showed you corresponds to these lines down here. Now, a better way to look at the new highs versus the new lows is to go to the next chart. I'll bring that alternate I key up again. You can see this is on Friday. The number of new highs is 41, new lows is 143, and that's represented here by these two lines. There's the new low line is red and the new high line is green. Now, the weekly volume was down, but you can see that throughout the week, the volume was drifting down, turned up a little bit on Thursday, and Friday it was up. But the cumulative volume for the week was still negative. But this is an ugly candle. What we're looking at here is support. Let me hold my shift key down here. Now that doesn't give me what I want. I'm just going to draw an arrow in here for an approximation. Looks like about 7,700 is support. If this is taken out next week and on a closing basis, it's not unimaginable that it's going to go back down to this area. And after the markets closed, Trump said he was going to impose more tariffs on China in retaliation. So who knows what the market's going to do on Monday, but I would not be surprised if there is a huge gap down on Monday. But just observe. Don't take my word for it. That's purely speculation. Now I'm going to move down to Ian's multiple indicator chart. You can see Bongo and weekly and daily are negative. AD is C, which we saw before. Force indexes are both negative. Bollinger Ribbon turned red. Bandwidth is still green, but pretty negative. You can see all these Hindenburgs here. By the way, the Hindenburg settings are, if you don't get what I get, we have deselected the smaller number of smaller of these numbers is greater than 79 because it was affecting none of the Hindenburg signals were showing up, and they should have been. So a lot of valid Hindenburg signals in there. I'm not going to go through the NYSE. You can do that on your own. Go through the same charts. They have, or I've put charts in here for the NYSE. You can look at those. They're not going to be much different. So what do we have here as far as relative strength over the last 3 weeks during this mess here? That'd be about 3 weeks. So what I'm going to do is quickly go into the ranking module, and I'm going to go to the, I'll use comparative relative strength for 3 weeks comparing to the S&P 500, since that is the standard comparison. And I'll just use a raw relative strength. Anything above 100, here's the S&P 500. You can see the base number is 100. Anything above the S&P, or 100, I'm sorry, is outperforming the S&P. Let me double check that number. 3 weeks, okay. And you can see that the volatility index is 16% above. Silver is almost 11%. The 20-year Treasury bond ETF is 10%. About the same for the gold miners ETF. Gold spiders, about the same. Utilities have outperformed by nearly 5%. The dollar index is 2.71% above. Here's the Innovator IBD fund. It's actually holding steady, well, steady with the S&P 500, but remember that's all relative because the S&P 500 is going down. So biology ETF slightly above. The SOX is slightly above. Now this is 3 weeks. I'll flip this to 1 week here in a second just to compare the last week. Now this is a ProShares short. These are all underperforming over a 3 week period. The NASDAQ 100 and so on. You can read it. I don't need to read them all to you, but the small caps have not been doing well. Let's see what happens looking at the last week comparison. VIX is up. Nothing much has changed at the top. The gasoline has moved up. Oh, the short treasuries actually moved up this week. Let me bring this up. And I'm going to minimize this for a second. They were up, but they gapped up earlier in the week and closed near their lows. But it's up slightly from the prior week. So just because the ranking module says they're up, you have to visually go in and look at the charts and look for demand and supply. It's all about demand and supply. So this last week, the small caps underperformed the S&P 500 index. That was the worst performer in this group of mine. Now, to get a better feel for really what happened over the last week, you should switch to the percent change, and then you can see the damage that was done over the week. The small cap was down nearly 3%, as was the biotech, transports, the SOX, which has been one of the leading groups in this run back here, especially. It was the past couple of weeks, positive candles. You can see it gapped open at the early part of the week, but closed near its low there. And unfortunately, there is not a volume for the SOX, but it was severely punished in the last part of the week, as was the NASDAQ. So this represents a week rather than a day. The NASDAQ composite, remember, was down over 3% yesterday alone. So it was actually positive until yesterday. So if you want to play this market, I mean, you can play the inverse ETFs, but you can get whipsawed in a hurry on anything. What do you do if you're looking for a play? Well, as I mentioned last week, I did put out a video last week, and I mentioned you should be looking at the high relative strength stocks, and that holds true. Let me get this in position. I'm going to go to my all securities. All you have to do is hit the alternate and the space bar. It'll go there. I don't know why I'm not lining up here. There we go. And I'm going to open this up. And here's a Kirkpatrick RS97 stocks, or HGSI RS97 stocks. A couple of screens that I have in here. I'm going to just take a look at the Kirkpatrick 97 since it's on top. I'm sorted on wall combo. This is my standard end of day. And let's see if I have the groups in this view. You can see that the strongest stocks, based upon the combo and relative strength, it's dominated by precious metal and mining. Yesterday when the market was melting down, there were two groups that were positive. One of them only had two stocks in it, two or three, and I can't remember what the group was, but precious metals and mining was the only other group that was up. So if you're looking for a play as of yesterday anyway, this is the group where you're looking. And now if you're using the intraday feature of HGSI with Thinkorswim, these stocks were all coming to the top of the list. Well, I shouldn't say they're all coming, but many of them were coming. I'm just going to go to chart number 4. And you can see that these stocks have had a very nice run off of the bottom. A lot of very solid, valid VPA flags coming into this, efforts to rise, and then a chop around, of course. But yesterday, after the tweets started coming out, this group really took off. I'm going to change to this. You can see that based upon the Kirkpatrick RS97 stocks, there were 9 of them yesterday. They all closed in the green portion of their daily ranges. Look at the relative strength over here. All in the 90s, and the group rank is in the 90s too. So there was some consolidation here. Slight pullback. The weekly chart, it showed a long upper wick 3 weeks ago on this particular stock, and then last week was a poor too, and it gapped down, but they turned around yesterday. Not yesterday, it looks like they started turning around early in the week, or this particular stock did, and it was up strong yesterday. Here's a test for supply. This is a no supply. Both of these are signs of strength as the volume falls off, but the stocks no longer are heading down. These are valid VPA flags up here. Let's look at, I'll just go to the next one. Pretty much the same thing. As I flip through these, you can see most of them look pretty similar. Here's a near early leader here. Here's a test and a confirmation of that test. Effort to rise, effort to rise. It's a matter of watching the market if you want to play, but HGSI gives us the ability to find these stocks either intraday or end of day. The intraday feature has added a tremendous amount of power to this program. I'm going to cut it off here. It's 25 minutes. That's long enough. The market is too insane to play unless you're in a strong group, and try using Kirkpatrick 97 and the HGSI RS97, and you will be able to locate some stocks that are potential trades. I'll see the Insider Club members who want to attend on Thursday. We'll talk about fractals, and I'm going to get into some more Wyckoff material. I've gone back to the original Wyckoff courses and been doing some reviewing. It's strange, these techniques. His techniques still work after all of these years. Thanks for listening.